All right, strap in, everyone. We're going deep on mortgages today. Our listener is clearly on a mission to snag the best rate possible.
Absolutely, and that's smart. We're talking about potentially saving, a lot of money over the life of the loan.
No small potatoes. And they sent us a stack of articles. Forbes Advisor, Bankrate, Investopedia, NerdWallet, the heavy hitters.
Yeah, they did their homework. We've gone through them all, pulled out the best tips, and some surprising stuff too, I think.
Okay, so first things first, credit score. It's basically your golden ticket to those awesome low rates.
It is. Think of it like getting into your dream school because of a great GPA. A high credit score does the same for your mortgage.
So we're talking more than just like bragging rights here. Good credit score equals serious leverage.
Oh, yeah, big time. Forbes Advisor pointed this out. Even a 0.5% difference in your rate can mean huge GE savings over time.
Wait, really? 0.5%? Doesn't sound like much.
It's deceiving. We're talking tens of thousands of dollars potentially over the life of the loan. It's crazy, which is why checking those credit reports is so important, all three of them.
Right, Experian, Equifax, and TransUnion. Didn't Bankrate say we can get those reports for free every year?
Yeah, they did. No excuse not to keep an eye on them. And here's a pro tip. Really look closely for any errors. They happen more than you'd think, and even a small one can tank your score.
Like finding buried treasure. Except instead of gold, it's mortgage savings. All right, credit score check. What's next?
All the articles were big on this one. A solid down payment. Put more skin in the game, as they say, and lenders love that.
Yeah, the more you put down, the less risky it is for them, which translates to a better rate for you.
Forbes Advisor recommended aiming for 20% down to avoid PMI, private mortgage insurance.
Oh yeah, PMI. Definitely want to dodge that if possible. But Bankrate had a good point. Don't wipe out your entire savings for a giant down payment, right?
Right, you've got to have something left for closing costs, which can be, what, 5% of the loan amount? It's all about finding that balance.
Balance is key. Okay, so credit scores, down payments. What else are lenders using to figure out those rates?
This is where it gets interesting. They're looking more and more at debt-to-income ratio, DTI. The basics. But here's a tip. Even if you're technically in the okay range, lower is always better. Gives you an edge.
Like showing the lender you're in control, right?
Yeah.
You can handle those payments, no sweat.
Exactly. Investopedia suggests aiming for a front-end ratio, that's your housing costs, below 28%, and then back-end, all your debt, below 36%. But again, lower is always a win.
Got it. Lower DTI, check. So we've tackled credit scores, down payments, DTI. What's next in our mortgage quest?
Time for the fun part, comparing offers from different lenders.
Wait, we don't just take the first offer we get.
No way! NerdWallet was very clear on this. Rates can be wildly different between lenders. You gotta shop around.
It's like finding a flight or a good deal on, I don't know, anything. You wouldn't just book the first thing you see.
Exactly. Investopedia even said to aim for at least 5 loan estimates to really compare.
5? Wow, that's a lot of paperwork. But I guess if it means saving thousands, I'm game.
That's the spirit. And to make this whole process easier, Credible's a good resource. They pull quotes from different lenders in one place.
Oh, that's handy. Okay, so compare lenders, got it.
Yeah.
But what about different types of loans? Aren't there a bunch to choose from?
You're right. Investopedia highlighted fixed-rate mortgages like a 15-year. Lower APR maybe, but payments are usually higher.
So it's like lower rate, higher payment trade-offs.
Exactly. Bankrate cautioned us about ARMs, adjustable rate mortgages. Can start low, but those rates can jump around later.
So, got to be really sure that fits your, risk tolerance and goals.
For sure. And NerdWallet was all about FHA loans for first-time buyers.
Oh, yeah, FHA loans. Remind me what those are all about.
They're insured by the Federal Housing Administration. Makes lenders more willing to work with, lower credit score, smaller down payments, that kind of thing.
So a good option if you might not qualify for a conventional loan.
Right. But as NerdWallet pointed out, FHA loans have their own considerations, like mortgage insurance premiums.
Yeah, those premiums can add up, so definitely factor those in.
Always got to look at the whole picture. It's about finding the loan that actually fits your situation.
This is a lot. We've done credit scores, down payments, DTI, comparing lenders, types of loans, anything else.
One more power move, mortgage points.
Mortgage points, what are those?
They basically let you buy a lower rate by paying a fee up front.
Wait, so we can actually negotiate with lenders?
Yeah.
I thought those rates were, set in stone.
You'd be surprised. Bankrate mentioned lenders often have some wiggle room, especially if they want your business. discounts for things like automatic payments or having a certain amount saved with them.
Like those talk to the manager moments at the store.
Exactly. It never hurts to ask, right?
Yeah.
Be your own advocate and don't just settle.
Love it. It's like a game, figuring out the best moves to get that awesome rate. Feel like a real estate tycoon already. Any other pro tips?
Well, both NerdWallet and Credible stress being organized throughout the mortgage process.
Makes sense. Buying a house, it's a ton of paperwork, documents.
Yeah.
Easy to get overwhelmed.
Right. NerdWallet said, like, have a dedicated file, folder, something to keep those mortgage docs straight, easy to find.
Oh, I love a good color-coded folder system. Makes me feel in control.
And Credible said set up email alerts so you don't miss updates or deadlines from the lender.
Yeah, those emails can get lost easily. So we've prepped our finances, compared lenders, explored loan types, even practiced our negotiating skills. Anything we're missing to secure that perfect rate.
Forbes Advisor had this great tip: be totally upfront about your finances with lenders.
Really? I figured they'd want borrowers who seem like they have everything, like perfect, right?
It's tempting to think that, but Forbes Advisor said lenders value honesty and transparency. Helps them accurately figure out your risk.
So it's about building trust, showing them you're responsible, and not hiding anything.
Exactly. Like a job interview, being prepared and open makes a much better impression.
That's a great point. So before we jump into part 2, any other big takeaways from our expert sources?
One last thought. Once you find that great rate, lock it in.
Lock it in. What does that even mean?
Basically, you secure the rate you got so it doesn't change while your loan is being processed. Rates go up and down all the time, so locking it in gives you, like, peace of mind.
So it's like insurance against those rate hikes.
Exactly. Simple step, but it can save a lot of stress and potentially money in the long run.
Awesome advice. All right, as we wrap up part 1 of our mortgage deep dive, what's the main takeaway?
It's that you have more control over your mortgage rate than you might think. Take some prep, some research, but the potential savings are huge.
Couldn't agree more. Understand what affects those rates, be proactive, and you're setting yourself up for success.
Absolutely. Welcome back to our mortgage deep dive. We covered a lot in part 1, from credit scores to down payments to those oh-so-important DTIs.
We're practically mortgage pros by now.
Well, almost. We've still got more to cover. Let's dive into how to actually snag that dream rate. You know, it's like we've studied the map, now it's time to hit the road and explore.
I like that. So where do we start on this mortgage adventure?
Investopedia had some interesting stuff about timing your mortgage application.
Timing. Wait, there's a good time, bad time to apply. I didn't know that.
Apparently. They said mortgage rates can be affected by, like, the economy, even the time of year.
Oh, like off-season travel or those end-of-season sales?
Exactly. Rates might be a bit lower when the real estate market is slower.
Okay, so got to do some research, see if there are any seasonal trends in my area. Maybe brave those winter open houses for a better rate.
Now you're thinking. And remember all that stuff about comparing offers from different lenders? Well, there's more to it than just the interest rate.
Right, those loan estimates can be like information overload. What else should I be looking for?
Bankrate had a good point. Watch out for hidden fees, closing costs. Some lenders will tempt you with a low rate, then make up for it with higher fees somewhere else. Sneaky. Like signing up for a streaming service and then there's all these extra charges you didn't see coming.
Exactly. You've got to look at the total cost of the loan, not just that interest rate by itself. Be a mortgage detective.
Sherlock Holmes of home buying. All right. What other detective tips did these financial experts have for us?
Forbes Advisor said something kind of surprising. Be totally upfront about your finances with the lenders.
Really? I thought they'd want borrowers who look like they have everything, perfect.
I get that. But Forbes Advisor said lenders actually like honesty. It helps them get a more accurate picture of your risk.
So it's about building trust, showing them you're responsible, not trying to hide anything.
Exactly. Like a job interview, being honest about your skills makes a better impression.
Great analogy. So timing, hidden fees, being upfront. Anything else we need to know about negotiating that rate?
This might surprise you. Don't be afraid to ask about discounts or promotions.
Hold on. We can haggle over mortgage rates. I thought those were, like, set by the banks. You'd be amazed. Bankrate said lenders often have some flexibility, especially if they want your business. Discounts for automatic payments, things like that.
Wow, I had no idea. Game changer. It's like those talk to the manager moments. You never know what they might offer.
Exactly. Be your own advocate. Don't settle for the first offer. The worst they can say is no.
I like that. It's like a game, figuring out the best strategies to get that awesome rate.
Exactly. And it's not just the interest rate. You can even try negotiating lower closing costs, too.
Oh yeah, closing costs. Those can add up quickly.
They can. Bankrate mentioned lenders sometimes have wiggle room there, too, especially in a competitive market.
So two-pronged attack, lower rate A&D, lower closing costs.
That's right. Get those savings wherever you can.
All right, we've got timing, hidden fees, being upfront, asking for discounts, anything else we can do to make this process smoother.
Both NerdWallet and Credible really stress being organized throughout the whole thing.
Makes sense. Buying a house, there's so much paperwork, it's easy to get lost.
Right. NerdWallet suggested having like a dedicated file for all those mortgage documents so you don't lose track.
Oh, I'm all about that. Color-coded folders, spreadsheets, everything in its place.
And Credible said setting up email alerts is a good idea too so you don't miss deadlines from the lender.
Oh yeah, those emails can get buried so easily. So organization is key. It's like packing for a trip. A well-packed suitcase makes the whole journey smoother.
Love that comparison. And speaking of smooth sailing, Forbes Advisor had this great tip. Don't be afraid to ask for help during the process.
That's a good point. It can be confusing with all the jargon and stuff. It's okay to need some guidance.
Absolutely. They suggested reaching out to like friends, family, anyone who's been through it before.
So having a mortgage mentor is someone to help you navigate the maze.
Exactly. They can offer advice, answer questions, even just be there to listen and support you when things get stressful.
Okay, as we wrap up part 2 of our mortgage deep dive, what's the key takeaway here?
I think the big takeaway is that getting a good mortgage rate isn't just luck. It's about being proactive, informed, and ready to advocate for yourself.
Love that. Follow the tips we've talked about, and you'll be well equipped to snag that dream rate and start your homeownership journey with confidence.
Exactly.
Okay, final chapter of our mortgage deep dive. We've done all the prep work, the negotiating, and now it's time for the grand finale closing day.
The moment you finally get those keys right, all that hard work pays off.
It's like the fireworks at the end of the show.
Yeah.
But Bankrate warned us about closing costs way back in part 1. Refresh my memory. What are those again?
Closing costs cover all those services and expenses that go into finalizing your mortgage. Appraisal fees, title insurance, loan origination fees, all that.
So they're not like random made-up charges. They're paying for actual stuff that needs to happen.
Right. And Investopedia said it's super important to understand these costs. NerdWallet even suggested asking your lender for like a detailed list up front so there are no surprises at closing.
Good tip. Always better to be prepared.
Absolutely. And speaking of being prepared, Forbes Advisor really stressed this carefully reviewed that closing disclosure.
Closing disclosure, that rings a bell. Is that different from the loan estimate we talked about before?
Good question. The loan estimate is like a preview of the loan terms and estimated costs. But the closing disclosure is the official document, the final one with all the terms and costs.
So that's the one you sign on the dotted line, like the real deal.
Exactly. Forbes Advisor said, read it carefully, compare it to the loan estimate, and make sure you understand everything before you sign anything.
Makes sense. We're talking big money here. A long-term commitment, got to be sure everything's accurate.
Right. And if anything's confusing, ask your lender or even a lawyer to explain it.
Better safe than sorry, right?
Yeah.
Especially with something this important.
Now, along with closing costs, there's another big step, the appraisal.
Oh, yeah. That's where they figure out how much the property is actually worth, which affects how much you can borrow.
NerdWallet explained that lenders use appraisals to make sure they're not lending more than the property is worth, to protect themselves and...
So it's like a check to make sure the house is a good investment.
Exactly. But Investopedia pointed out that if the appraisal comes in lower than what you agreed to pay for the house, well, that can cause problems.
Uh-oh, that doesn't sound good. What happens then?
You might have to renegotiate with the seller, maybe put down a bigger down payment, or even walk away from the deal completely.
Wow. So that appraisal can really change things.
It can. So it's good to know how it works and be prepared for different outcomes.
Okay. Closing costs, appraisals. Anything else we need to know about this closing thing?
One last bit of advice.
Yeah?
Be prepared for things to maybe not go exactly as planned. Delays happen.
Wait, really? I thought once the offer's accepted, the loan's approved, it's all smooth sailing to closing.
It would be nice, wouldn't it? But NerdWallet said things like title issues, problems with the home inspection, even just slow paperwork can cause delays.
So, gotta stay flexible, be patient.
Exactly. Don't plan any big trips or anything right around your closing date just in case.
Good point. It's like planning a wedding. Gotta expect a few hiccups along the way. So, even though closing might seem a bit scary, it's also the most exciting part, right? You're finally getting the keys.
It is. All that hard work pays off, and you're officially a homeowner.
And remember, you've got a whole team helping you, your lender, your agent, maybe even a lawyer. You're not alone in this.
That's right. It's like having a cheer squad helping you cross that finish line.
Love that. So to our listener who's on this exciting home buying journey, take a deep breath, stay organized, don't be afraid to ask questions, and most importantly, enjoy the ride.
Well said. We hope this deep dive has given you the knowledge and confidence you need to navigate this whole mortgage process and get that dream home.
Knowledge is power. Happy house hunting, everyone.